Welcome back to another weekly market and financial update. It's July 23rd, 2024, and while we're waiting for companies to release their earnings reports, which historically most companies release right toward the end of July after the second quarter comes to a close. So I would imagine within the next week or two, we'll have lots of data to talk about and hopefully lots of exciting news that continues to push the market in this bull market that we are experiencing. But in the meantime, let's talk a little bit about cash accounts. So we are in some of the highest interest rate environment that the United States has seen in a very, very long time. And because of that, cash has become a very attractive option to a lot of investors. Most folks can go to their local bank or to an online institution and find a high yield savings account or even a money market fund that's yielding probably right around 5%, which is tremendous. If you think before COVID, most rates we could find, I mean, if you were lucky to find a high yield savings account, it was like 0.1%, right? So it's a huge difference now from going 0.1% all the way up to 5%. And that has really given the rise. There's about $6 trillion in the United States right now that's just parked in cash because yields are so attractive. Now, the Fed is poised to lower rates later this year, and that definitely will have an impact on cash accounts. Most banks and financial institutions will begin to lower rates pretty quickly after the Fed says that they're going to lower rates. And while cash has been very, very attractive for a long time, cash, I think, over the next 6 to 9 months will maybe start to fall out of favor as other asset classes become more attractive. For example, we've talked about fixed income or bonds already. Bonds right now are very, very attractive for a lot of investors to diversify their portfolio. You know, you can look to a high grade corporate bond that's yielding anywhere from 6.5, or maybe even 7%. And to lock in a 5 or 10 year bond that's yielding that rate is significant, especially as cash assets continue to come down. You know, if your money is in a cash account and you're getting 5% today, if the bank lowers your rate to 4% or 3%, you can't lock in your current 5% rate. You'll be subject to whatever the current market rates are. Whereas if you're investing within bonds or fixed income for a 5 year period or whatever the term of the bond is, then that interest rate is in fact locked in for the entirety of that bond, as long as you hold that bond until maturity, right? If you sell the bond or it gets called, you know, that's a different, subject for a whole nother situation. But for most folks holding bonds, that's where the yields today can become very, very attractive. So just keep in mind, if you are someone that has your money in cash or has moved a larger portion of your money in cash, I think we're all in the same boat, myself included, right? Putting money or more money than typical into cash. Just keep an eye on it. That's really the message for today's video, is know that while cash is still pretty attractive today as an alternative and a great way to diversify your portfolio, it's not likely that cash rates will sustain where they are. And once those rates start to fall off, it's important to have a good backup plan of saying, okay, where can I reposition myself for success? Where are other asset classes that I could move my money into? And if this is something that you're struggling with or you're not 100% sure, saying, then this is a great video, but I really am not sure where to then move my money out of cash. That's what we're here for at Vision Retirement. So reach out to us. We're always here as a resource to each and every one of you. You're welcome to reach out, give us a call, go online. We have a query on our website. All of our contact information is online as well. If you want to schedule a meeting with us, send one of us an email. All of us from the team, Gene, Paul, Nick, and myself, all as advisors, are here to help. So whatever we can do, please reach out to us. And again, keep cash in mind as just a focal point of your portfolio as interest rates continue to change throughout the year. So thank you so much for tuning in. I hope everyone is enjoying the middle of their summers. We have about 6 weeks left, so take your time to spend with your families, loved ones, friends. Enjoy, and we'll see everyone next week. Thanks for tuning in.